Hello, everyone. Welcome to our new presentation. So happy to have you here. This is Silver Hill Masterclass, Learn Today, Close Tomorrow. My name is Zach North, and I'm the marketing director here at Silver Hill. And I'm going to hand it off to Juan Barcelo, our head of sales, in a second. Before I do, I just want to let you know that you have a question pane there, so you can ask as many questions as you want. I will hand those off to Juan, and if you have time at the end, Juan would be happy to answer your questions. If you have specific questions about a scenario, a program, a deal you might be talking about with someone on our team, feel free to ask that question too, and we'll connect you with the right person to talk to immediately following the call. So again, super excited to connect with you today. Juan, please take it away.
Well, thanks, Zach. Really appreciate it and happy to be back on this circuit. We we suspended this for a couple of months over the fall. We always like to provide a webinar once a month to talk about new products, our process, and anything else that we want to educate our broker community of. So thanks for taking the time today. We should be about 30 minutes. I don't expect it to go longer than that. Today is a relatively short and sweet presentation, but very exciting because we have a lot of cool stuff to discuss around new products and new opportunities with Silver Hill Funding. So let's get going. Just want to review the agenda with you real quick. We'll give you a quick overview. We'll talk about the new program and its benefits. We'll look at some closed loans that we've closed recently. And finally, how to get started, reaching out to one of our reps, and doing some marketing. Okay, so this is me and this is Zach. Zach is the marketing director, puts together these presentations and does a great job of it. So we're very happy that Zach is on this. And then my name is Juan Barcelo. I've been with the company for 16 years, and this is my, let's see, probably 8th year, 9th year with Silver Hill Funding. We are a company that's basically a wholesale lender focused on working exclusively with the mortgage broker community. So we're looking for loans and business from our mortgage brokers all around the country. We do lend in most states. And we work with mortgage brokers all over. So, our focus, and many of you may know of us, but our focus is basically the small balance commercial world. We are the commercial loan origination arm for Bayview Asset Management, which is our parent company. Okay. And so our focus is strictly on the commercial lending origination side. A little bit of background on Bayview Asset Management. Bayview started back in 1993 doing mortgage consulting, really. We're headquartered in Coral Gables and have asset management offices all around the country and all around the world. And we have roughly 16 billion in assets under management. And our company, Bayview, we're the commercial originations arm, but Bayview focuses strictly in the mortgage finance world. So we're into, mortgage-backed securities, trading securitized bonds, and we do a bunch of other cool, neat stuff. So Silver Hill is really just that commercial loan origination arm. So let's talk about, the focus is small balance commercial loans, 100,000 to 2 million. But let's talk about, what kind of loans and what kind of scenarios do make sense. Okay. So the most important thing is we look for folks that have been turned down by banks. Certainly there's a lot of this, banks end up turning down. I don't remember the stats, but there's stats always different times. Banks turn down probably about 80% of the loan requests that they see. So we exist in the market to capture that business. Okay. So those people that, want to go to the bank, want to get approved, maybe they have a cash out, maybe they want to purchase an investment property or a property that's owner occupied, but for some reason like debt service coverage, personal income, business income, or one of those reasons they can't do a loan, we exist to service those borrowers. Um, Additionally, borrowers who do not qualify for SBA programs. So, we have an excellent bank statement program that I'm going to talk about in a little bit. That's really aimed at this group of people that, they want to apply for that SBA loan, but they just can't get approved. Borrowers with maturing loans. A lot of the loans that we do end up being cash out refinances, in fact, but a lot of the times people are trying to pay off a high interest rate um, bridge loan or a bank loan that's maturing, and the bank asks them to refinance out of their book. So those are also good opportunities for us to finance. And usually with maturing loans, you're coming off of a variable rate loan on a bank, or you have a maturing loan that's a bridge loan, or even a hard money, high interest rate acquisition loan. The idea is to lower rates and payments, which is what we exist to do. And finally, borrowers cashing out equity. About 40% of our pipeline is usually cash out refinances. Borrowers looking to take money out for different reasons, whether they want to buy another investment property, cash, or they want to finance working capital for their business, or they want to add inventory, add payroll, any one of the other reasons why a business owner or an investor would be looking for cash, we provide that. So let's start with a survey question. Zach, take it away. Want to see who's out there, what you guys think of the business currently.
Yeah. Hey everyone, it's Zach. Before I launch the question, just really quick, I'll let you know that this webinar presentation is being recorded, and we're going to send it straight to you. So of course, feel free to take notes, but we will be giving this to you. So I want to let you know, I've already gotten a few questions about that. Anyway, let's launch the first question. Simply asking, have you closed a small balance commercial loan within the past 6 months? Just saying who's out there. We sort of tailor our conversations based on this question to whether we can go a little more high level or a little more in depth. So it's helpful for us to know who you are and how active you've been in this particular space. So I'm just going to give you a few more seconds, see people answering now. So hold on for 1 second. Okay, Juan, it's very even. About 53% say yes. So we've got a mix of originators who are making these loans and quite a few who are not. So I think that's exactly what we want. So let me close this.
Absolutely. Thanks for that, Zach. And listen,
Sure.
We want to learn more about you guys, and it's good. Those of you that have done deals, we want you to do deals with us, more of them. And those who haven't, we want you to also start with us. So that's great. Good to see a good mix. So borrower profiles, again, going back to talking about when it makes sense. So, folks that miss bank eligibility, again, we talked about debt service or documentation. Banks turn down deals a lot of times because a business or an investor doesn't have the experience over a 24-month period. Okay, or the debt service coverage that they're looking for is a little bit higher than what the property can sustain. Or it could be LTV. Banks will do loans, but typically they do loans in the 60 to 65% range. We like to take it to 75 and are working on an 80% purchase product as well. So, it's those just miss with the bank. We are looking for people with strong credit. We prefer credit scores over 700, although we will go down to 650. And this individual, this borrower, they went to the bank because they wanted a low rate. So they may not necessarily be a hard money candidate paying high points and high rate. So we exist in between the banks and hard money for this type of borrower, the borrower that's a just miss at the bank, still wants a good rate, okay, but does have strong credit and a strong financial profile otherwise. Another reason why people come to us, we were the first in the market to come out with a 30-year fixed product on commercial property. Back in, it was, Zach, I think it was the spring of 18 that we came out with our 30-year fixed product. And, we just tried it out to see what people would do with it, and it quickly became our top product. And within months, several other lenders also started doing a 30-year fixed product. And today, basically, every lender that does small balance commercial loans, wants to offer you a 30-year fixed. So I think, for people to be able to fix in a loan for the long term, they avoid that, refinance that comes every 12 months or every 36 months or every even 5 years with a variable rate loan at a bank. So it's you close and then you don't have to do anything again with the loan, unless obviously you want to refinance at some point to cash out. But there's no obligation like there would be, with a variable rate, a variable interest rate, shorter term loan. And then finally, cash outs. Banks typically don't like to do cash outs. They want you to basically reinvest any of the money into the business. But we know that real estate investors and business owners many times want to cash out for other things. Okay. This is a quick overview of our program. Our tier one properties are our single family rentals and our investment rentals and our multifamily and mixed use properties. This is the pricing for that tier one. And then we have the tier two. So tier two properties, we would add half a point to all these rates. And that would be our, typical mixed use commercial, retail, office, warehouse, light industrial, self-storage, mobile home park, and automotive. Okay. We used to do restaurants, but as everybody could imagine, them being in the center of the pandemic issue, we are not currently lending on restaurants. Okay. So basically, as I was talking about, borrowers that are near misses at the bank, but they still want decent rates, you can have rates in the fives and still be competitive. We're just wide of the bank rate by maybe 150 basis points. But basically, the alternative to a bank loan, instead of having to go all the way to a hard money lender at 7, 8, 9% with points, we exist in that middle ground to still provide a good financial solution for that borrower at a decent rate. On the right here, we talk about our general terms. Again, 100,000 to 2 million. We do purchase, cash out, and refis. We do the 30-year fix. We also have a 5-year arm. Sometimes folks want to go with a 5-year arm, so we offer that. And then, we do purchase 75% LTV. Like I mentioned before, we are working on an 80% LTV product. We're hoping that the economy continues to improve, albeit, today's, unemployment news wasn't a good one, but the market feels a little bit differently about the economy than the unemployment numbers would figure. So who knows? But we are looking at launching a 80% purchase product. So we do, for refinances, whether it's rate and term or cash out, we do lower the LTV on loans above 500,000 to 70%. Amortizations, we offer 15, 25, and 30. 100% of our loans are written at 30-year amortizations because people want to keep those payments low and that cash flow high. And then rates, our floor rate is 4.75. We are now doing loans in the 5.5, 5.25 range. Sometimes brokers like to earn yield spread, and we certainly allow that. So if I priced a loan out, I think it was yesterday, the day before, like at 5.75 with 2 points of yield spread paid to the broker. So very, very attractive rates that includes yield spread to the brokers. So let's talk about our properties. We talked about tier ones. That's our multifamily and our single family rentals. And then our mixed use residential, where the focus is more residential units and commercial. That's our tier 1 property types. Then obviously retail, office, warehouse, self-storage, light industrial, automotive, and mobile home parks. Those are our eligible property types. We like to see them all. What we see most of and what we have the most success with is the multifamily, the SFR rentals, and the mixed-use residential, which are tier 1s. We do a lot of office and we do a lot of retail. Okay. We see the occasional mobile home park and the occasional self-storage. Light industrial and warehouse, very competitive these days with e-commerce and all that. So banks like to take those deals a lot of the times. So some of the properties that we do and that we want to see. So we want to see all these properties on the top eligible. The stuff that we don't want to do, we don't want to see is your raw land and your farms, new construction, environmentally sensitive properties like gas stations or anything having to do, dry cleaners we won't do. We won't do gas stations. Churches we don't do. Anything involving adult entertainment. Strip bars, we won't do that. Anything that's cannabis related, the rules yet haven't changed around the country, and even though a lot of states are legalizing cannabis, the anti-money laundering laws nationwide prevent lenders from getting involved. On top of that, you have sometimes title companies that will not will not issue title insurance policies on these type of properties. So for now, until the law changes, we can't do those. Properties that require significant rehab, we're not a fix and flip lender. We're not a rehab or construction lender. We want properties that are already stabilized, that are rent ready, that can be used right away or that are generating income currently, okay? Then finally, special use properties. We won't do marinas or bowling alleys or movie theaters. We've gotten golf courses. We've gotten a bunch of that stuff, but none of that we can do. So as I mentioned before, we have 3 really distinct programs. Our typical commercial property program, which starts with the 5-unit or higher multifamilies. Our bank statement program, which is our SBA alternative or bank alternative for owner-occupied properties. And finally, our SFR rental program. So the commercial program, look, we try to keep it very simple across the board, where we keep, terms pretty much the same. I want to bring your attention to our documentation for commercial because that's really where it changes. We will go down to 650, but we are going to want to see tax returns on all commercial deals. For the most part, on an investor deal, we would look at the property's cash flow. For an owner-occupied deal, commercial, we're going to look at the business that occupies that unit. So, for example, if you have somebody that owns a beauty salon, we're going to look at the beauty salon business itself, those tax returns to make sure that that business could carry the debt of the property. So, we do a global debt service for owner-occupied, but for investors, we're going to do only property debt service. But we do require tax returns for the commercial program. So it's a full doc program. Then fees, we charge an underwriting fee of $2,000. We don't charge points at all. There's a legal doc prep fee. Okay, so we keep it very lean on the cost to your borrower because since we're broker focused, we want our brokers to be able to charge their 2 points on the front, and we want them to make 2 points in yield spread. So you have a max total compensation of 4 points. Okay. Our SFR rental program is I'm telling you, is one of the most competitive in the market right now. We are working on that 80% purchase product, which there's a couple lenders that are coming out with one now too. But listen, we are 1.0 debt service. It is 700 plus credit, but we're talking about rates in the low 5s, high 4s, and we only charge $2,000. That's it. So there's no additional legal doc prep fee of $1,500. There's no credit report fee or nothing like that. It's a flat $2,000. which is a lot cheaper than pretty much every other lender that's doing SFR rentals right now. Most of these other lenders are charging a point to a point and a half on the front end. We are only charging $2,000. That's it. And again, our brokers can make, up to 4 points on these deals. Again, I priced one out in the mid to high fives. Priced another one out yesterday, or was it the day before? I was at 5.25. I think it was paying 1 point in yield spread. Okay, so again, this program is very competitive. There are a lot of lenders out there doing it. Remember, we are doing rentals, not fix and flip. So we want to see those properties that are already, ready to go to be rented, rent ready. And again, 1.0 debt service. For this product, all we require is our application and a tri-merge credit report. That is it. We don't get anything else. We don't need leases. We don't do any of that. The focus there is to get a market rent from the appraisal, and we're off to the races. Okay, so our SFR rental program, $2,000 fee only. You can make up to 4 points, and we only need an application and a tri-merge credit report to get the ball rolling. Let's talk about some closed loan case studies. One thing before we start with that is the bank statement program is, as I mentioned before, is our alternative to the full doc and to the bank programs that SBA offers and some of the other banks offer. Basically, there we need 12 months of business bank statements from the business that occupies that property, and we are ready to go. A lot of excitement around the bank statement product. We just rolled it out in the last week. Okay, so let's look at some closed loans so far. Multifamily, in PA, the focus here is high LTV, and the broker comp, $8,200 for the broker on this one. It's not a very big loan, but nonetheless, we like those multifamily properties, and we'll do them all over the country. Okay, the next one in New Jersey, this was an office. This was a cash out. Broker made $7,200, so 2 points. And listen, you can make up to 4. Brokers, will be able to decide what they make. Sometimes they can negotiate, 2 points in the front or 1 point in the front, and they want to make their yield spread on the back, which is fine. We do offer yield spread. We pay it directly. It's not on the closing statement, so the borrower doesn't see it. So again, the broker comp is all over the place because it all depends as a broker on what you can sell with regards to rate and cost to the borrower. The next one is looks like a duplex maybe, or even a triplex in Connecticut that we closed in our SFR rental program. 65 LTV cash out, 30-year fixed loan. That guy's never going to have to refinance again. Why they fit? Income, the borrower was able to provide consistent, stable, and verifiable income via rent roll, operating statements, or tax returns even, and now bank statements. Credit history, the rates our program is FICO driven and LTV driven. If they have good scores and they have a good credit history, our deal makes the most sense for them. Reserves, they had the 6 months worth of reserves on their bank statements. They showed basically liquid assets of 6 months or more to cover any potential losses for 6 months. And guys, very important, right? We have, we're in the middle of a pandemic. Some tenants aren't paying. And so when we do a loan, we want to make sure that that tenant has enough liquid reserves or liquid assets to cover potential rent loss due to the pandemic, for example, or due to rent loss. Or, you may have some businesses inside a strip mall that they're tenants and can't pay because they're not getting any business during the pandemic. So reserves is always a very important risk mitigating factor to potential rent loss as a result of, any of the macro factors in the economy that can happen. And finally, the condition of the property. We don't do properties that have deferred maintenance or that need rehab. We want stabilized properties. So that's why these 3 deals we talked about before fit. They fit the box. We had strong borrowers with verifiable income that wanted those lower rates. And the brokers ended up making, whatever compensation they wanted out of it. Really, on average, we see brokers make between 2 and 3 points total. but we do have brokers that send us deals that make 4 points consistently, so it all depends on how you can sell that. Okay, Zach, another survey question for the group.
Sure. Let me fire this one up. Launching it right now. Are you seeing these types of scenarios today? We outlined a few different types: office, multifamily, 2 to 4. Are you seeing these scenarios? Are they coming across your desk? We'll give you some time to answer, and then I'll read out the results. And Juan, we're getting some great questions too. So
Awesome.
So I'll try to share as many of those as we can once we're finished here. All right.
Sure.
So it looks like we are good. Oh, overwhelming one. 91% say yes. So that's exciting.
Great. Well,
Back
that
to
is
you.
certainly good news. So we're looking forward to doing deals with all these guys. That's great. Very exciting. Okay, let's move on. One of the things we like to educate our brokers on is, look, the idea is understanding the sweet spot. So we talk about what fits, but everybody knows in the lending business, nobody's converting 100%, nobody's closing 100%. There's always different reasons why properties fall out. So some of the reasons we like to provide as an education point, right? Like, hey, this is what we do, and these are some of the reasons why loans weren't able to get done. So ineligible property types, okay? The property demographics, the property was too rural. Listen, we like to do loans in the major, cities, and sometimes the suburbs. But when you get a little bit farther out, it gets a little bit sparse, the population, and so for us, we consider those properties to be too rural and a little bit more risky than we have appetite for. So we like to stay away from those. Some people, can't provide tax returns for whatever reason, and we don't ask questions why, but some people just don't want to. That's why the bank statement program is so important for us for our owner-occupied loans, because they don't have to. Okay. Same goes with the SFR rentals. They don't have to provide tax returns, but on our commercial product, they absolutely do. And then credit guidelines, another issue. Recently we had people go into forbearance. They haven't been paying their mortgages, or they've had foreclosures, bankruptcies in the recent past, and as a result, we're not able to do loans in those cases. The other things we see a lot is judgments, past judgments, other liens, mechanic liens, personal liens. So those are all issues with regards to our guidelines where we just can't do a loan. Another one that we get a lot is foreign nationals. They don't fit in our guidelines. We don't have a provision for foreign national lending. So again, all these are different reasons why loans don't work, why loans fell out of our process. DSCR minimums. Sometimes when you get the appraisal back, you find out that the income and the expenses are higher, and so that throws off the cash flow, and so the debt service becomes a problem in those situations. So a lot of different reasons why loans fall out of our process. And here on the right, we talk about some common ineligible property types that we mentioned before. So you've heard about our programs. This is basically an overview. What we really want you to do is call one of our reps, reach out to them. You can also reach out to me directly, and I'll get you in touch with one of them. But the idea is to learn more about what we do, okay? We are very excited about our bank statement program. We're very excited about our very competitive SFR rental program. And a lot of brokers, this week has been a great week for us, given our changes to our product. So we're seeing production skyrocket this week. There's a lot of demand out there. There wasn't capital available throughout all of last year, but for the, small business PPP loans and the, any hard money lenders that still were putting money out there at high interest rates. So the demand is there. The capital sources weren't. So we're happy to be back. We're happy to expand our program and to loosen our guidelines a little bit so that we can see more business from you guys. So what we really want you to do is, call to action is really follow up with one of our reps in these areas. Zach does a great job with the pricing matrix and with our website in general. So go to our website. There's so much stuff there. There's a marketing toolkit that'll help you develop your own marketing flyers. There's email formats. There's phone call formats. I mean, there's so much there. But most importantly, there's rate sheets, and we like for everybody to have our rate sheet, as a desktop resource, so you can refer to it and understand more or less where we are as you look for options for your borrowers. Zach, do you want to add anything on here on the website?
Yeah, no, so we do have resources available. Also, we try to keep our loan program pages updated and clean, so it's easy to reference back at silverhillfunding.com. We also regularly put out content. I think it's always worthwhile showing case studies, what works, what doesn't. I think that's the best thing, to actually see the loans, even seeing the properties themselves. It gives you a really good idea about what we can do. So we want to give you as many tools as possible. That's our goal with the website, our social media, our LinkedIn account. Love to connect with you there if you haven't already. But yeah, I mean, a lot of resources, and I'm always interested in hearing from you what you want that we don't have today, because then I can make it for you tomorrow.
That's important, Zach. I mean, and Zach's team does a great job, guys. We get a lot of feedback from our brokers, with questions. Hey, can you guys do this for me or that? And we've been able to deliver most of the time. So very cool stuff, and Zach does a great job with it. Okay, so the product, you know a little bit about the product. You know where to go to get our forms and our rate sheets. So what do we need? We really need, an application, okay? We need a credit report, rent rolls for multi-tenanted properties, P&Ls and operating statements for the last 2 years for the property. And we're really focused on year to date. So not only for investor properties, but also for owner occupied. We want to see all the year to date information. So, it is the beginning of 2021. Taxes probably aren't done yet for most small businesses and investors. So we really want to see those 2020 financials. Really, we're going to underwrite based on that and to see what happened in 2020. Purchase contract is available if applicable, if it's a purchase, obviously, and then last 2 years of tax returns for our commercial product. For our bank statement product, it's 12 months of bank statements, and for our SFR rental is really just the number 1 and number 3 is all we need for the rental product. So relatively easy stuff. Listen, on a full doc loan, our commercial or bank statement, we want to see that stuff on the front end. That way our reps can really size up your deal, price it out accurately, and decide if we have a loan or not, okay? So the more information you provide on the front end, the better it's going to be for you, for the borrower, for us, everybody else. One note there, working remotely, as a lot of us are, our whole team is working remotely, but we are using DocuSign now, so we can send you a DocuSign application for the borrower to sign. It tends to turn things around a lot faster than to have to, basically scan and print and upload and all that stuff and sign. The DocuSign process makes it easy. Our application is available via DocuSign, and when we send out our letters of intent to apply for a loan, that is also going out DocuSign. So we've made working from home relatively easy. For a limited time, for the rest of this month, we are offering a free appraisal, okay? A free appraisal for all SFR rentals. That is any 1, 2, 3, or 4 unit residential investment property, okay? So a free appraisal, usually a savings of between $500 and about $750 to the borrower. So we're very excited about this. Free appraisals is a common promotion, but not too common on the commercial side. So, we want to encourage our brokers to call us, price out deals, and have their borrowers take advantage of the free appraisal promotion. Okay, Zach, I think that was good. I mean, we try to keep it down to about 30 minutes. Do you think we should answer some questions?
Yeah, yeah. I think we want to give everyone back some time of their day, but we see so many questions. I think there are some important ones here that you can cover. First, I can answer one. We have a question. I do a lot of SFR rentals. How can I price these out? Do you have a rate card? I price 3 or 4 out every day. Yes, we certainly have a rate sheet. We showed you a little graphic of it a minute or two ago. We'd be happy to send that out to you as soon as we finish the call. So we'll make sure you get that. That's great news. So Juan, I think the rest are for you.
Okay.
Here is a question. Here's a question here. To what MSA do you underwrite? So what are we looking at?
Great question. So our focus is more around county population than the actual MSAs. So what we like to do is, and that's a great question. What we like to do is for tier one, which is our SFR rental, our multifamily or mixed use, we like the county population of that property to be 100,000 plus. Okay. And then for our commercial stuff, which is our apartment buildings, I'm sorry, our retail office, mixed use commercial, which is our tier two, we want to see 200,000 plus county population. So we really focus on the county population at a local level rather than the MSAs.
Okay, great. I have a quick one. Do you lend to foreign nationals?
So no, we do not lend to foreign nationals. We don't have a program for that. It's a little bit more complicated underwrite with regards to the personal guarantee for our loans. So we do not. We do not do foreign nationals.
Okay. Running through here, how many months of bank statements do we need to provide for the bank statement program?
Great question. So what we want to look at on the bank statement program is the last 12 months business bank statements for the business that occupies the property we're financing. So 12 months.
Okay. It's really a ton of really good questions here. So if we don't get to all of them, we'll be sure that one of our regional managers answers your question immediately following this call. So let's see here. Okay. All right. So this question was asked a couple of different ways, but essentially saying, who is my rep? This case is in Colorado. But Juan, what would you suggest for people on this call who either don't have a relationship already or did, but it was about a year ago or something like that? How can they best connect with us to make sure that they can reach a specific person that they should be talking to?
So I just pulled up the map with our contact people. But the best thing you guys can do is go to our website, Silver Hill Funding. You go to contact us on the top right, and it's going to pull up this same map everybody's looking at, and you hover over the state where you're located, and it'll give you the person's the rep's email and phone number, and you can just contact them directly.
Okay, great.
On top of that,
Sorry.
Zach, I mean, our information is always on here too. You guys can email or call me. I prefer email because I can get to more people via email, but you can email me. I can answer you myself, or I can forward it to one of our reps in those areas to follow up.
Great. Okay, so I actually have quite a few questions about bank statements. I'm going to ask a couple more here. Let's see. Is bank statements available only for owner occupied?
Yes, the answer is yes. So we're only doing bank statements for owner occupied. For our multifamily mixed use commercial, we do collect we do collect tax returns, but the focus is really on the property itself. So not on the individual's income. We collect the personal and business tax returns for documentation purposes, but not for underwriting purposes. So that's important for investor deals.
And another question, a quick one, but it is available for refinance as well as purchase.
Correct. Correct.
Yes.
So the bank
Okay.
statement program is an owner occupied alternative.
Okay. Juan, I have a question here that we could devote an entire presentation to, and we probably will need to do that again. I know we've done it in the past because we really like talking about it. But we have a question that says, we have over 70 loan officers, but very few have done these types of loans. So probably more of a residential shop. For the average residential LO, how different is the process for them and our processors? So, I mean, just talk, like, maybe you could talk for a second about some of the people on this call who are maybe very interested in doing commercial, haven't yet. What are some like immediate next steps they could take?
Okay, maybe we should do, and we have this contact information, is we can do a presentation just for that group. Maybe we are invited to like their next sales call or what have you, and we can do a quick 15 minutes. But one of the biggest differences is that it is not a commoditized product like the residential loans are, where everybody's just looking for the lowest rate and they don't care about anything else, right? On the commercial world, it's not necessarily about the rate. It's more about, can you do a cash out for me? Is the property going to carry the debt? You know, can I do a loan? Obviously we do a lot of our loans under a business name, which is very different than the residential world. Most of the loans we do is to a business, so our borrowers are businesses, and the loans are guaranteed by the individuals behind that business. So it's a quite different process. The appraisals on a commercial property are $2,000 to $3,000. They're not 500 bucks. So different from that standpoint. But really, for commercial borrowers, is, can you get the loan done? For residential, it's so different because, yeah, every lender that does residential can do the loan. And then it's just a question of, who's got the lowest price, right? Um, but really, it's the financial solution, is who can solve my problem, who can get me out of a hard money loan, who can do a cash out for me on a commercial property. And you'd be surprised, banks and lenders really don't like these loans under $1 million. Most banks, most credit unions, they'll do loans over $1 million all day long, but not these smaller ones on commercial property. So it is quite a different process.
Right. Well, thank you. And like I said, we have materials we'd be happy to share with you. It's definitely a popular topic for us, and one that we really do enjoy talking about. So we'll try to connect with you after the presentation, see what kind of next steps we can take there. But really, Juan, I've got a final one, and like I said, I'm seeing a lot of specific questions here that we definitely want to answer, but we'll connect with you after the presentation and give you the appropriate person to really go more in depth on some of these questions, because they're really good. But last one is not even a question, a comment. Love working with Bob, and that would be Bob Worthington out in California. So thank you for sharing that. I'll be sure to let Bob know.
Absolutely.
And hopefully, right, and hopefully everyone else is developing positive relationships too with our team. A really great group of people. So, Juan, I think that's it. Like I said, everyone, we will distribute this recording to you, so you can watch it again at your own pace. And we're very much looking forward to connecting with you further after this presentation. Juan, I'll let you close us out.
Perfect. Well, thanks everyone. I appreciate your time, and we're looking forward to working with you. Feel free to reach out to either one of us. If you're having trouble getting in touch with somebody, but we're here to help you, and we're here to help you make money. The idea here is you provide a solution for your borrowers, and we help you make money on that. So, looking forward to working with everyone. Have a great rest of the week, and we'll hear from you again soon. Take care.
Bye, everyone.